So I recently decided to fund a Moomoo account with $500 because a lot of new traders and new investors think in order to make money from trading, you need to have thousands, hundreds of thousands, millions of dollars. But no, what you need is a solid strategy. So in today's video, we're going to be doing an update on this $500 swing trading challenge to prove to you it's not about how much money you have, it's the strategy. So I hope you guys all enjoy this. If you guys do, hit that like button and subscribe. And if you want to learn more about swing trading, how to swing trade, the strategies, the approach, how to find these undervalued stocks, check out our school. It's an 8-week course. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. You guys have lifetime access to it. It's absolutely fantastic. And you guys can use code CHALLENGE because the $500 swing trading challenge for 50% off. So code challenge for 50% off. Check it out down below. We're only going to do that for 3 spots. That code is valid for 3 people. So check it out right now. And guys, let's jump into this here. So this past week, we've had an amazing week. We are up about 5% on our money, which is always really, really good. And our total profit and loss, we made about $54. Let's go. We are sitting at near and around $1,088 from $500, which is awesome. You know, I know a lot of people right now are commenting going, well, he only made $50, $55 this week. That is not enough to live off of. Well, the thing about it is with $500, yes, I am not going to be able to live off trading with $500. But what I'm excited about is the only thing that's separating me from making more money isn't my strategy. It's the approach. And I want to show you guys the reason why having a good strategy and good risk management is very, very, very important here. So let's pull up here our charting. This is the stock that we traded, ticker symbol DX, and we'll talk about that. But look at this here. So this right here is a trade return calculator. And the reason why I wanted to show you guys this is because it's awesome. If you guys started out with $100 and you took about 25 trades over the course of a year, risking about 2% with a risk and reward of about 1 to 4, risking $1 to make $4, with a 50-50 win or loss, your total account is going to be near around $213. So the biggest thing about trading isn't your starting out money, because that will slowly grow. You guys can see the trade return graph right here. It will slowly grow the more you trade. So the biggest thing is just understanding the strategy, your risk, and reward. So obviously, if you guys had $500, right? You guys can see now we're moving and grooving over $1,000 in 25 trades. So looking at this stock here, this was the stock that we traded with our entry price near and around that 512 mark, or not 512, the 1206 mark. Why did I say 512? All right, so before I ever place a trade, we need to know everything about the stock here. We want to make sure that this thing follows our checklist. Our checklist here is very, very important, and this is kind of it right here. Let me show you guys it. So this right here is our trading checklist. And looking at it, you guys can see here, the first thing is an upward trend. The next thing is some sort of support. We want an undervalued RSI. We want to know when the earnings date is. We want a good risk and reward. And then we want some sort of lower time frame support, preferably on the 1 hour. So now let's see how well we did. So you guys can see good upward trend. So that's that first box checked off. The second box, support. Support could be a variety of things. In this circumstance here, we use that 90-day moving average line as support. And the reason why we knew we could get buying pressure there is because it hit it several times in the past. And you guys can see it hit it, and we've gotten buying pressure every single time there. So we had a good intuition that we could get some buying pressure out of this thing. The next thing is going to be the RSI. At the time of purchase, the RSI was at about a 37. In an ideal circumstance, we want it under about a 30 to a 35. But more importantly, what we actually want is look back at previous history, because history tends to repeat itself. Looking at the last time it was trading here, you guys can see it hit it. We had that good move. Previous to that, where it was undervalued on the RSI was in here, then in here. So we understood, okay, maybe with a lot of stocks under a 35 or a 30, but this stock here, I think we could be a little more flexible because of previous history. That's why we took the trade. Another thing here is earnings day. The earnings is actually in about 10 days. So I understood as long as we set an alert, for near and around the 28th, I think we'll be in a good spot, because I never hold through an earnings. It's a very risky time to hold a position. I mean, you can even look back at previous companies like Nvidia, like Apple. The last time they announced earnings, it's a 50-50 chance of making money. Either the stock squeezes up or it sells off a bunch. So the next thing here is risk and reward. So going back to that trade calculator, this is why having good risk management, and especially with a broker that allows you to use it. So our entry price was near and around that 1206, or around that 90-day moving average line. Our target price is going to be all the way up here at resistance. The next thing here is going to be our stop loss. So our stop loss here, we try to keep it 1 to 2% from the current price. So we'll go about there so the stock has some flexibility of getting some buying pressure. So now, looking at this, right? Looking back at this very, very cool calculator, you can see how you can still make money off losing trades. So this stock here, I could be wrong with it almost 4 times and still make money off these types of trades. But let's go ahead and look at the hourly and see kind of how we're looking. So the reason why we got in on this price all the way down here isn't because I had some genie telling me the future. It's because we understand technical analysis here. You guys can see that this stock was getting a good amount of sell-off, forming this general downward trend here. Each and every time it hit that line, we just had a lot of selling pressure. So we understood that, and we wanted to get in on a breakout of that. So what we did is we drew that line, and you guys can see that stock got that initial pop up, and that's where we entered, setting our stop loss right at first, right below these moving average lines. So, or right below these candlestick lines. So near and around, that 1190 mark, right in this range. So if it does continue that trend, we will just get stopped out. But more importantly here, what it did, and which brought a lot of other opportunities, was it formed this really good trend line, right? You guys can see it hits this thing several times, forming really, really good buying pressure on it, that really good trend line. Now the stock has been moving and grooving like crazy. So the approach that we have now is it did a bullish golden cross right here where we have a lower moving average line break up through that 200. So the blue line broke up through the red. The last time it did that here, you guys can see, let's go back and try to find it here, was back in here where the stock went from about $11.80 all the way up to about almost $13 a share. So I understood that this could be a very bullish thing for the stock to do, which definitely kind of fuels that fire. So now the approach here is just keeping our stop loss near it, right? So now our stop loss is going to be near and around the 12.59 mark. So if it does dip down, we'll just take our profit, move on to other opportunity. And that's why having a good strategy, having good risk management is very, very important. And we've traded this same stock here with our larger account, our same entry price and everything, and we are sitting up near and around $768 off of a 5.3% return. So guys, the biggest thing about trading is don't focus on home runs. Home runs will happen as long as you swing for base hits. So what that means is don't expect to make $1 billion off your $100 trades. Just focus on those small returns, those 1, 2, 3% returns that just compound over the course of a year. That's what makes up a trader, and I really believe that's what makes a successful trader from a non-successful trader. So guys, I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and don't forget, if you want to learn more about trading, check out our school, Code Challenge, for 50% off. Only a couple of spots left for that code. I hope you guys all enjoy it. Like, subscribe, and we'll see you guys in the next one. Take care.